Hi everyone, MMI Trading here. Welcome back to the channel, and in today's video I'm going to do a review of all of the trades I took this February. Without wasting much of your time, let's get started. So guys, before I get into the meat of the recap, I would like to take you guys through my thought process. My thought process basically is nothing more than the rules and criterias I come every single day to identify to help me qualify if a system is, or rather if a setup is a high probability setup where I can put my money into that particular trade setup. So the first thing I come to identify in the markets are the positioning of the moving averages. I particularly use 5 exponential moving averages, which are the 8, 21, 50, 200 and the 800 exponential moving averages, but I pay particular attention to the 50, 200 and the 800 exponential moving average. The other short-term moving average are just used as an indicator to assist me in exiting a position and to help me determine the level of momentum behind that trade. So the next thing I identify is the positioning of the sentiment line in the TDI. The TDI is nothing more than the trend directional index. It's nothing fancy. It's just combining the 21 period relative strength index and the 34 exponential moving average. So what I want to see here is a synergy between the moving averages and the sentiment line. So if the sentiment line, this blue line here, is below the 50 area of the RSI, that communicates to me that the sentiment of the market is bearish, coupled with the positioning of the moving average. So where the 50 is below the 200 and the 200 is below the 800, that tells me that it is a bearish trend. Now the next thing I identify is an Asian range break below previous day's low. I use a period separator. A period separator is this dotted vertical line here to easily help me identify highs and lows for the entire previous trading day. So the next thing I need to identify is price action context. And when it comes to price action context, guys, this reading and understanding price action context takes a lot of screen time and a lot of experience, but the basic idea here when going over to the 1 hour chart to actually pinpoint price action context is that I don't want to be trading against long-term support and resistance. I don't want to be selling against long-term support and buying against long-term resistance. And when it comes to multi-timeframe analysis, I do not go as far as the 1 hour chart because the system is traded on the 15 minutes time frame. So as at the point of that trade, the price action context was pretty clear, and it was something that communicated to me bearish dominance in the market. So if I would just zoom out here, as you can see, before the entry of a trade, which I have identified with this red vertical line here, prices found resistance at this level multiple times, 1, 2, 3, 4, 5, before we had this huge impulsive break, pullback, turning this level in this area rather into a role reversal area of former resistance, now support. Before we had this push to the upside, prices came back, reacted to that level, and we had another push to the upside, but the push to the upside did not equal previous push, creating lower highs. Prices came back. Let me zoom in here again. Prices came back to that level, reacted, pushed back, not equaling this previous high here, creating another lower high before we had the break. So from this price action context communicates to me bearish dominance as opposed to bullish dominance. So going back to the 15 minutes chart and back to the trade area. Now the next thing I want to identify here is a pullback to the 50 exponential moving average in confluence with previous day's low before switching over to the 1 minute chart to identify my divergence entry. But before switching over to the 1 minute chart, I try to identify the absence rather, of bullish divergence. The way I use divergence, it's quite unconventional. I don't use divergence to pinpoint reversals, but rather I use divergence to pinpoint turning point in the direction of a trend. And what divergence communicates to me from the system perspective is a likelihood of a change in market prices as opposed to a total reversal. So in a bearish trend, I do not want to see any bullish divergence which would communicate otherwise. So switching over to the 1 minute time frame. Switching over to the 1 minute time frame here. As of this point here, prices rather, we're printing out high highs, while the RSI we're printing out lower highs here. So basically, in simple terms, divergence is just where the price of an asset is moving in an opposite direction to an oscillator. So many people love to use the MACDs or some other oscillator, but I prefer the 21 period the 21 period relative strength index when trying to pinpoint divergence. Now, once divergence is confirmed on the 1 minute time frame, I switch back to the 50-minute time frame, searching for other entry signals such as pin rejections or fake breakout pullback or fake breakout entry technique, which prices gave me a pin rejection of, let me zoom in here so that you guys could see this. It gave me a pin rejection of the 50 after this divergence broke out and immediately pulled back in. So my entry for this trade was at this level here, the 189.43.8 level, and I placed my stops at this level here, the 189.66.8 level. And as you can see, guys, this was a pain-free trade. Now this is where I use the short-term period moving average, the 8 and the 21. So you see, it's not unusual for you to see the 8 crossing over the 21 in a bearish market. Vice versa for a bullish market, it's not unusual for you to see the 8 crossing below the 21 exponential moving average. But upon entry, I would love to see an immediate switch back in the direction of the trend, that is the 8 crossing below the 21 and prices hugging the 8 and the 21 exponential moving average. As at the time of the entry, ADR is also an important indicator I use when also analyzing the market. If prices has exceeded the ADR, there's no point seeking for opportunities in the market anymore, because ADR stands for average true range and is the amount of pips that particular currency pair can offer for that particular day. ADR, there's several ways you can calculate the average true range. You can calculate it using price movement for 20 days, 10 days, 7 days, but I use an indicator in the TradingView app known as the ASFX ADR indicator, and that helps me calculate my ADR and pinpoint where ADR is as at that point in time. As at the point of this entry, prices had not maxed out ADR, so it was still a valid opportunity, which adds another layer to the probability of the setup. So that's it, guys. I had another trade on the Euro USD on February the 22nd. If I would just clear all these lines here, February the 22nd. Now, using my rules and criteria to analyze the trade, everything met my criteria except the presence of this bullish divergence in a bearish trend. Moving average is positioned well, sentiment line below the 50 area of the RSI communicating bearish sentiment. Above the 50 area would communicate bullish sentiment. Price break below previous day's low. On the 1 hour time frame here, guys, the context was clean. Price is creating here lower highs, lower highs, lower highs, communicating a bearish markets and a bearish dominated markets. So going over to the system, switching over to the 1 minute time frame, I had my divergent entry signal here. Prices moving highs, the oscillator, the RSI, creating lower highs, higher highs, lower highs. Switching over to the 15 minutes time frame here. Prices gave me that fake breakout formation again. 2 entry signals there, and I executed my trade here. I executed my trade at this level right here, the 113.032 level, and my stops I placed it at the 113.181 level, which ended up in a losing position, which ended up in a losing trade. This trade, I lost money on this trade on the February 22nd, and also February 22nd I also had another trade on the euro Aussie dollar. Let me go over to that day. I was doing my markups and doing more back tests to find out at that point in time. So let me not just waste your time here, guys. So the same rules applies, but at the end of the day, yeah, this was the trade. The same rules, the criteria I look for, the thought process I go through every single day. I had another losing position here, which is really nothing bad there. So 2 losing trades and 1 win, which my returns for the month of February wasn't really that stellar. Wasn't, by margin wise, it wasn't really much, but I did well on February. I would actually put my FX book matrix on the screen so that you guys could see that I actually had I actually made above 6% January using the same system, and February it wasn't really a losing month. It's not a losing month for me, but the profit I made February due to these 2 losing trades just simply reduced the margins of the profit there. So that's it, guys. If you found value in this video, you can simply subscribe to the channel and turn on that notification bell so that you get notified anytime I post a new video. If for any reason you do not understand how I trade the system, you can leave a comment in the comment section below, and I would do my best to answer all your questions, or I would answer all your questions and try to make you understand where you lack, the areas in the system where you lack understanding. So without further ado, MMI out.